So if you look at it across the board, it's telling you there's no money flowing in. Look at the growth of stablecoins. It's been stable since the summer, right? So we've got no money coming into the crypto economy. So over time, people need to pay bills, realize stuff, and foundations need to sell tokens and all of those things, and the number go down because we've not had liquidity in the crypto economy. I just don't want to confuse that with it's the death of layer ones. It's nothing's going to work. DeFi is not going to happen. It's like, no, it's just a slow economy right now in crypto land. We've gone through a slow patch. That's how I think about it.
Right now, the crypto market seems frozen, stablecoins have stopped growing, altcoins are flat, and Bitcoin has barely moved. Raoul Pal says this isn't the end of the bull run but a liquidity pause. With limited money flowing in due to high treasury balances and stalled government spending, the market is simply short on oxygen. Pal believes this slowdown is temporary. Once liquidity returns through Fed rate cuts and fiscal expansion, crypto could reignite fast. Ethereum and Solana, which have been consolidating for months, may lead the next surge as adoption and liquidity align. He predicts 2026 will mark the true peak of this cycle, fueled by trillions in new liquidity. Pal says patience is key. The frustration and disbelief now are often the signs of a bottom.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
I mean, there's a real indicator, and I call it the monkeys throwing poo at each other indicators. It's when everybody loses their shit and starts insulting everybody on X. And I get all of these, but you said, and all of this stuff starts happening. And that's reached a crescendo yesterday. And I'm like, yeah, it's probably the bottom. And it kind of happens every time. It's like, but, really, the truth is when you actually kind of filter out the noise, what it is people are so desperate to get ahead. It's a real kind of, right, they all think of this as their one chance. So it's like a serious thing. But, there haven't been around financial markets or volatile assets where you have to learn how to do this. And the way to do it is do nothing and stop worrying about it. But, every day they think that the P&L goes down. It's like my financial future's ruined. It's all over for me. And then the next day they're like, I'm going to be a gazillionaire. I'm going to order a Lambo. It's like, just don't do any of that. I've seen entire hedge funds in the crypto space, because I've got the asset management business that invests in crypto hedge funds, rewriting their mandates to trade equities. And I'm this is a signal, generally speaking. And, when you say, well, why have equities done better? What's going on? Why is crypto underperformed? Why is gold outperformed? It's all based down onto the same everything code framework. So gold is currently, gold used to be real rates. That used to be what gold traded on for a long period of time. It's now current financial conditions. Financial conditions lead by about 6 months Bitcoin. So when you put those up, share the chart on X, it's like a perfect match. Is it going to match perfectly in the end? Who knows? But basically, it's living in the future gold or living in present financial conditions. Equities have been living in liquidity, as have crypto. But since the Fed shutdown and the draining of the reverse repo, there's been issues in the plumbing of the financial system. So liquidity has been drained out. Equities have a bid because everybody's structurally underweight tech stocks. It's a huge problem. I mean, every survey is like record underweight tech stocks, and yet they keep ripping higher. So they're having to chase, and then you've got the 401k flows that come in by the passive investing. But crypto doesn't have that. So what's happened is it suffered from liquidity over this weird period of tightness that's occurred, which was the rebuild of the Treasury General account and then their inability to drain it because of the government shutdown. They've got nothing to spend the money on. So it just keeps stacking up. It's $960 billion right now, and they can't spend it until the government reopens. And because the reverse repo is empty, there's no other liquidity measure they've got. So lo and behold, repo market blows up or starts showing signs of stress, and the Fed have to step away from QT. Things will change a lot next year. There's a lot to come out of all of this. I'm going to share a chart just because I think it's this one. This is the chart that really kind of matters. It's like the total three, so that's excluding Bitcoin and ETH. Right. So we still haven't gone through where we were peak of the prior cycle. And it's been a slow crawl versus a speedy ramp. And this is because I think it's to do with the debt maturity got extended. So this is like a weird mid-year. Yes, I did imagine it was going to break this on this occasion. When was that? July. I thought in July it was going to break through. Not that I'd do anything about it. And then it had the big puke. But really, a pattern like this usually means that we will eventually have what we want. But it's the patience that's tested everybody. Because this has been a long period where a lot of this stuff has not gone to highs. And even then, it was January that everything else was at its highs, like SUI and everything else. And so everyone's been waiting 11 months or 10 months to have anything.
Now people are calling for the top. And I'm like, this just doesn't feel like a top. Like when people are like this, crashing out every single week, that's not a top. That's not Bitcoin at 110K, like 10%.
No, it's when everybody's on X saying, celebrating each 1,000 rise, Bitcoin feels great at 150,000. I wonder how 151,000. When everybody's doing that kind of stuff, you kind of know that we're getting a bit effervescent. But also, when I look at it in macro terms, is all the macro tops have come with business cycle tops or the business cycle low. They've all come with liquidity tops, liquidity's expanding. And then when you look on a forward basis, we've got the government shutdown to reopen. That's going to open $1 trillion of flow out of the Treasury General account. We've got Fed rate cuts coming. We've got the changes to the SLR, which is the minimum requirements for banks. We've got potential balance sheet expansion coming. We've got China expanding its balance sheet. We've got the Trump tax cuts to come into place. We've got, the list is endless of liquidity that's to come. And we've got to roll $10 trillion of debt. So my view is we had this extended year, which was this year, because they didn't need to roll the debt because the debt got matured to 5 years. So we just had ongoing liquidity. And I think 2026 is going to be a banner year.
Can I ask?
I still think the end of this, I think November, December are going to be very strong here as well. It's been a stupid easy environment in tech. But yes, the decoupling of NASDAQ from crypto has been interesting, but I think it's explainable. So normally you need to figure out why something is happening and is there real signal there? So one signal may be crypto's topped and everything else is going to fall afterwards. I get it, but I would give that a 20% probability or 30% probability versus crypto's being affected by liquidity at the margin because it's the most influenced by liquidity. And when it comes back, it plays catch up. So the alligator jaws get close to the upside.
Yeah, I'm not worried about that decoupling for a long time. It will come back at some stage. You just don't know if it comes back on the way down or on the way up. Do you know what I mean?
Right. That's right. And you at some point the NASDAQ will need to correct, but structurally, and there used to be a hedge fund who was one of my clients based out of Miami. Every year they come on with the same trade, and every year it worked. And that trade was around about now. They come and buy call spreads and sell downside puts in every major market because the year-end rally effect is real.
The crypto market feels stuck, but Raoul Pal says it's just a liquidity pause, not the end of the bull run. With limited capital flowing in due to high treasury balances and stalled spending, markets are simply waiting for fresh liquidity. He believes once the Fed cuts rates and global spending resumes, crypto will surge again, with Ethereum and Solana likely leading the move. Pal expects 2026 to mark the cycle's true peak and calls patience the real edge right now.
But yeah, for some of the smaller ones, I saw today that 10% of all of ETH's supply has now been bought by the DATs and by the ETFs. How insane is that? And it's still only briefly touched an all-time high. And this trade has really gone on for the last 6 months.
I had a thesis from the last cycle that this cycle would end up having a shortage of ETH because of the burn mechanism. And then if you start locking up ETH like this in vehicles that aren't going to sell very quickly, you end up with a shortage of the stuff. So it gets very convex. So it feels like it could do that. It kind of breaks 5,000 before you know it's trading 10 in like a month.
What is your banana zone prediction now for the next 18 months? You think you similarly think it's going to be a strong
look,
December
it's very misunderstood. When we talked about the banana zone, we said, right, okay, the phase 2 starts. It started in April, and it went up. Everything doubled or tripled from then, and then pulled back. And we've got this weird liquidity period. I just think nothing changes. The market, I'm very bullish. I think it goes up a lot over the next 12 months based on liquidity in the Everything Code framework. And so nothing really's changed for me. The only thing that sometimes changes is time horizon. It's like, well, I didn't expect the government to shut down for the longest period in history, but we've got to deal with that. And that means they can't draw down the TGA. Okay, we need to deal with that. But, other than that, I mean, when I just look at these markets, let's go share a chart here. SUI, that's my main position still. It's, as you said, it's just been in this, it's a year. It's exactly a year. It's been at the same price. But it went up to 5.5 and it's been down to wherever that got down to, 1.65. But it's just choppy. And when I see patterns like this, usually they resolve higher, 70% of the time. So there's a 30% chance it doesn't and the market's topped and we're all morons. That's fine. I've lived with that before enough times in my life. But when I look at something like that, it looks just pretty obvious. And, Solana, it's just pretty obvious.
Yeah.
To me, it's just, knowing what we know about the macro, looking at those charts, looking at like Ethereum. I mean, these are nice charts.
Yeah, they show ranging for a period of time, which we realize in crypto, you just have to have insane patience because the real gains are made in like 2 or 3 months where you haven't given up.
And realized volatility in Bitcoin and ETH is like in the 20s and 30s.
Yeah.
So historic vols are super low. Implied vols are actually pretty low as well now, about 40 or whatever. So things like IBIT calls for the year-end rally, talking about
let's do some call spreads.
That's Why right. Not? That's what's in my head. That's what's in my head. We put some on for GMI last month, but I'm like, I can't see a reason why I wouldn't add to that trade because you buy some calls, you lose a couple of percent. We deal with that every day in the market going up and down. Nobody cares. So you stick in a couple of percent on the IBIT calls. If you get it right, you can make some serious money. Because if you look at the back-end rallies, if they come, it's generally about 100% in it.
Raoul Pal explains that the current crypto slowdown isn't the end of the bull run, but simply a liquidity pause. With high treasury balances and limited capital flow, the market is temporarily out of fuel. He believes this stagnation often signals a bottom, setting the stage for the next big move once liquidity returns. Pal predicts that upcoming Fed rate cuts and renewed global spending will reignite the market, with Ethereum and Solana leading the charge. He sees 2026 as the real cycle peak and urges investors to stay patient. This calm may be the build-up to the next explosive rally. Do you believe this liquidity pause is setting up the next crypto surge? Which asset do you think will outperform once the market reignites? Share your thoughts in the comments.